Why did you set up MProfit?
My journey founding MProfit started with a very challenging but interesting problem.
What have you seen sort of change in the market?
Entire landscape has changed. This is just the beginning of our wealth industry, especially after COVID. Millennials are taking investment decisions for the family. They want to build and diversify their portfolio for very long term. If the research report holds true, where we are going to cross from 3.5 trillion to 5 trillion, we are entering into a middle income.
The source of truth is the chartered accountant. If you sold it to the CA, wouldn't that reach all the customers?
Many chartered accountants do use MProfit. We do have a reporting which chartered accountant can use and file the returns.
Free portals provide holdings data.
They may be doing it at some level of automation, but there were a lot of manual data punching necessary required.
Do retail investors look through and say, okay, what was the performance attribution of the fund manager who I've given this to?
We have a mechanism or a feature available where a user can create a separate portfolio just for their PMS. At an investor level, definitely the investor wants to know how that has performed, and that is where MProfit comes into play.
In the holding statement, there's one column that says date bought.
I believe that even if the date bought is there, let's say you're holding Reliance as a share, you may have bought it on different dates. The holding statement is now going to be able to show you that breakdown of all the different purchases that you have made. That factors into your performance tracking.
Rainmatter invests in fintech startups with the intention of investors doing better with their money, which we believe will also help deepen markets in India. Join us as we speak with the startups and venture capitalists who invest in them about how they are approaching markets, fintech solutions, in all subsectors of lending, payments, investments, insurance, and infrastructure, as well as their businesses from scratch.
Hello and welcome. Today we're speaking with Kiran Shah, one of the co-founders of MProfit. Let's dive right into why did you set up MProfit?
Hi Hansi. My journey founding MProfit started with a very challenging but interesting problem. I was juggling my investments, my transaction data from various brokers, financial institutions, tracking returns as asset level, individual level, family level, and I was using complex Excel sheets. I was kind of enjoying it, but it became overwhelming at times. So I tried to look for some solution. I could not find any solution which can track multi-assets at that time. So I thought, I would not be the only one facing this issue. There would be thousands of investors like me would be needing some similar like this, and being an entrepreneur, I thought there is a business opportunity. Having my domain understanding of various investment products and the way I manage it manually using various models, it helped me conceptualize the product idea. And that's where, I along with my co-founders founded MProfit to solve this problem.
Right. So it's a classic case of founders sort of finding your own pain point and solving your own problem. But what is your background? Why did you think that you were uniquely placed to be able to address this problem?
So I have always been an entrepreneur since 3 decades. This is my third venture. The earlier 2 ones were in the technology space, though I was on the business side. But this particular venture is very close to what I understand, and it was my domain expertise. And doing investment for a while, it was very interesting landscape at that times. Things were started opening up.
Which year is this now?
This was in 2009-10, where some of the investments, new products have started coming in, and I was exploring various different products. And I was so after my second venture, I was full into investments, and I thought that I'll take a break and do my own investments. But after a while, I got bored. Just that it's not. I was always doing on sides, but full time was not my scene. So I thought, and this opportunity came up. So that's where we are.
And you have a co-founder as well, Pallav, right?
So Pallav is a long time partner as well as friend. We've been there since last 3 decades, and this journey, and Manish joined later on, and then Atik and Ashin. So yes, we have a great team. I can say I am very lucky to have founders who believe in the bootstrap ventures, which requires a lot of patience.
Right. So how would you describe MProfit? What is the product?
So in layman terms, if I were to describe, it's like a financial notebook where you can list down all your investments, stocks, mutual fund, fixed deposit, property, gold. You can track your investments. It gives you a net worth, family net worth. It will show you what are your capital gains, how much taxes you have to pay, and then you can make some better investment decisions.
So financial notebook is fine, but everyone uses Excel. Why is it better than Excel?
I would not agree on that, because Excel is pretty complex. When the problem which I described, it's not easy to solve. When you are juggling with disparate financial transaction statements, which if you invest in stocks, you would receive contract notes in various formats, be it HTML, PDF, Excel, or mutual fund statements, or your NPS statements, or your bonds or gold bonds. How do you manage everything manually? It's extremely difficult. So that's where some kind of automation tool is required, and to some extent some of the tools are available to manage certain asset classes, or maybe your financial advisors might give you reporting, but they cannot give you complete reporting of all your asset classes, multi-asset. That's where MProfit come into play.
Right. So you said because you were trying to solve your own pain point, say I'm a retail investor, why can't I just go to money control or a value research or something like that to get the holding statement?
Interesting question. I mean, we have been asked these questions quite often. Why I can go to some of the portals which are doing this job, or my broker is providing me this report. So some of the portals which they give solutions, but everything is manual. What we have done when I started, as I explained to you about the problem, the first problem which we encountered was how do we aggregate data. I mean, every broker, every financial institution has their own way of providing you transaction statement. Like as I explained, everything was manual. How do you punch in data into any of the portal? It was so laborious. And that's where we started building in our own aggregation engine, where it can normalize the data from variety of sources and just put it into MProfit. So that's where we differentiate, and MProfit is not just the tracker where you can just see the consolidated view, but it gives you different analytics, which we can of course discuss about as we go.
So, I mean, you said different sources. So, for example, brokers, there's 700 odd brokers in India, and they give you different transaction data. But isn't that a matter of lack of standardization? What if the regulator steps in and says, okay, you now must provide this standard?
Very interesting. I think that's what we've been hearing. With one great initiative they have been trying to do is the account aggregator. But what has happened is that and currently some of the investment apps, they do aggregate data from different demat accounts and show you the consolidated view, but that's just the overview of your holding level data. I mean, if you want to track at a different, compute your returns at XIRR, or you want to compare it whether the benchmark, that would not be able to provide you. Even aggregator right now currently gives you the aggregated the holding level data. The transaction level data is not available at this moment, and MProfit does one more step where it aggregates at transaction level. That's where we can give you very detailed analytics.
So now who is the ideal user for this? Is it a high net worth individual like yourself?
Over the last decade journey, I think what I have realized that investors' behavior has changed. I mean, yes, I mean, in good old days there were very few investment options available, but now when you see multiple investment options, be it stocks, mutual fund, your gold bonds, your REIT, InvIT, your NPS, and every investment needs to be tracked differently. The computation of capital gains are differently tracked, and that's where MProfit comes into play. And also the demographic has changed in terms of investors. They understand the asset allocation. They would like to diversify their investment. They have certain goals in mind when they invest, and that's where you require certain analytics, and that's where we are providing those deep analytics.
But who's the end client? Who are you targeting?
So we started with investors in mind, but I'll be very honest, recently in last 1 year, we have pivoted to more savvy and HNI investors, but still we have a lower plans for retail investors who are managing up to 1 crore. We have brackets for 1 crore to 5 crores, and then the HNIs. And we are seeing that savvier investors, irrespective of their profile, many of them use MProfit.
But the savvy investors would also have financial advisors, right? And surely financial advice firms, wealth management firms, all have back office sort of tools that provide this sort of reporting. In fact, that's one of the advantages of going to financial advisor.
Right,
and then they should also help you with rebalancing to the right asset allocation and things like that. So are you targeting high net worth investors who do it themselves, or are you targeting wealth managers, or both?
So very interesting question, where when we started, it was started for retail investors like me, or HNIs, but interestingly in our journey we realized that MProfit was also being used by wealth professionals, chartered accountants, sub-brokers to manage clients' money. They started requesting various reports, features catering to their needs, and that's where we sensed the opportunity, and we have rolled out different plans and features and reporting for them. So now we serve both the customers. But to your point, if you are going through any financial advisors, or you are going through, suppose your broker, and they would provide reporting for the transaction data you've done through them. How about if you manage through multiple financial institutions, you different brokers, how do you aggregate those data at transaction level? That's the main problem which we have solved.
Okay. But the source of truth is the chartered accountant, right? People may have multiple financial advisors, definitely multiple products, but they usually have one chartered accountant. So if you sold it to the CA, wouldn't that reach all the customers?
So many of the CAs use MProfit, but for a different purpose, just to compute capital gains. See, CAs also run different practices, and their mandate is to compute capital gains. But when you are, and they may not be able to help you manage your finance or investment. So there are different functions. So like investment advisor would have his or her mandate to show you the path where you invest your money. Once you realize the profits, you will go to chartered accountants and you file your returns. So yes, many chartered accountants do use MProfit, but for you or any investors who would like to manage individually, they would definitely use MProfit, and they will also go to chartered accountants. So we do have a reporting which chartered accountant can use and feed it into their system to compute and file the returns.
Okay. So let's talk about what has your experience been when you go and speak to chartered accountants and these wealth managers? How open are they to buying a product like this?
I think it is changing. In the very early on, some of the B2B customers might have thought that if they start using MProfit, and if the customers find out about MProfit, they would say that, okay, if MProfit is providing this report, why would I need my financial advisors? But the point was different. MProfit is a wealth tech solution. We come in after you trade in, you invest. So that's big learning which we have learned and we have explained to the customers, and now most of the B2B clients understand that their customers demand better reporting, and you will be surprised that many of the B2B customers we have acquired is by reference of the individual investors, because they like MProfit reporting and they have recommended MProfit to their financial advisors.
Interesting. Let's zoom out a little bit, and given that you have been sort of operating in this industry, I would love your view. Please riff on the wealth management industry in India since you've seen it, since 2009, say, for example. What have you seen sort of change in the market?
The entire landscape has changed, I would say. If you see the shift from traditional investments of fixed deposit, real estate, gold, to various investment products, stocks, mutual fund, NPS, ULIPs, gold bonds,
so the variety of products,
REIT, InvIT, n number of products. That's the biggest shift we are seeing. And to put numbers in perspective, where we are right now, it's staggering. If you see active NSE investors, 4 crore. We have reached 19,000 crore in SIP, monthly SIP. If you track mutual fund AUMs, it is 54 lakh crore. Number is close to $600 billion.
Is that an outside financial services company looking at India would look at the number of investors available in India?
Yeah.
How many have you seen as people who have surplus to invest? Because there's a debate. I don't know if you've seen, Nitin sort of has said there's only 40 million odd.
So Nitin's perspective is right, that so many startups and fintech and wealth tech are chasing certain number of users. So that argument still holds. But where I am coming from, I have seen the journey, and I have seen the shift in investor behavior moving from traditional assets or investment to embracing different new products. The profile of the investor has changed. Currently, if you see this, especially after COVID, the decision making has changed, where millennials are taking investment decision for the family. They want to build and diversify their portfolio for the very long term, and that's the biggest change. And one other factor is financial literacy. Some of the online portals, influencers, brokerage houses, and Zerodha Vast City is the best example, educating investors. So that shift is happening. And the question which you ask is whether there are enough users where all the companies are chasing. But from our perspective, we come from the wealth space, but on the portfolio management side, and we currently don't see many players operating at multi-asset, because most of the players are on the transaction level. So we kind of away from this, and we are seeing the benefit of right now we are just the unique players in this space.
Sure. It's funny, in the startup world, I think it was Kishore Biani who started it, and then Sajid Pai from Bloom also picked it up, but they sort of segment India into India 1, India 2, India 3.
Yeah.
Have you seen that sort of segmentation?
Yeah, I read little.
So like a developed market, whatever. But way before that, the wealth management industry has always had a segmentation of high net worth investors with investable portfolios of 1 million, so excluding the house. Then they have sort of the affluent segment, sort of 100,000 to a million, and then anything less than 100,000 was considered retail or mass.
Correct.
Then they came up with mass affluent sort of in between and so on. So would you say that your sort of segment is very much the high net worth?
Very interesting. I think when I started, I would have never segmented the segment. I just thought that this would be useful for all kind of investors, and we operated that way. And that's where we have developed the product where we satisfy needs of all customers, and now including B2B. So to demonstrate that, we have different plans for different class of investors. So we have plans to manage up to 1 crore, which you call it retail, and then you have middle affluent is 1 crore to 5 crore, and then we have above 5 crores plan, and then the family offices plan. And in terms of numbers, yes, those numbers are very interesting for us, and we are very excited about this affluent class. But I would say that when you talk about 1, 2 and 3, I think 2 is a very interesting space which is happening right now, where some of the new age brokers, investment apps have democratized the investment.
It is the holy grail. I mean, don't get me wrong. So the startups are all wanting the India tool.
But I still believe that, again, I am not the expert on the subject matter, but I still believe, based on my experience, this is just the beginning of our wealth industry. We are still new, maybe 2-3 decades old, but there is a growing optimism. If you read various research reports, India is in a bright spot. And if the research report holds true, where we are going to cross from 3.5 trillion to 5 trillion in next 27, and then 7 trillion in 30, and if our GDP crosses $5,000, imagine we are entering into a middle income, and that would have lot of effect in terms of consumptions and savings. Yes, savings, traditional savings have, in percentage is coming down, but the quality of saving is changing to the new investments, to new types of investment, and that's where I see a lot of opportunities.
The only issue with the high GDP number is that the level of inequality is also increasing. So the number of people in the lower end is also increasing.
Absolutely. I am not the expert on this subject, but I am right now talking about the middle income. The incomes are rising, and I believe that with the investment cost have come down from good old days of 2.75 to 8 to right now on mutual funds about 0.75, 80. I think it's a phenomenal thing in terms of brokerage, with of course the discount brokers and new investment apps. So it has democratized, and everyone can participate. You can see if even the retails can participate in fractional ownership of real estate or infra play. So I believe that this is just the starting point.
Speaking of which, so let's talk about the wealth management industry, both the advice industry as well as you said, the number of products. So these are manufacturers or asset management companies. What do you think is triggering this, and where are we at in the journey in terms of the number of products? So for example, the number of products, the types of products has definitely increased.
Yeah.
But do you think that the number of wealth management players have kept pace?
Very interesting question, which I have seen when we started off. There were so many distributors or so-called mutual fund advisors or agents who were selling different plans, but at that time the cost was high and reward to those were structured differently in terms of entry loads, which SEBI has rationalized and normalized. Now everything is, so they had to change the business model, and now I am seeing that new youngsters, new professionals are coming into play, which are not only advising clients at one level of asset class, like in earlier days only the mutual fund was the asset class or maybe the sub brokers at the stock levels, but now they are offering plethora of different products, whichever need suits the requirement of the individual investors, and focus is more on the asset allocation, long-term corpus building. So I see new players are coming into the market. They
are, but the numbers don't bear that out.
Absolutely.
The number of mutual fund distributors has basically been stagnant at about 1 lakh or so. EUN including another sort of lakh, so that's 2.3 sort of lakhs, which is 230,000 people in the mutual fund industry. The number of wealth management players, I mean, a lot of foreign players have come and gone.
Correct.
The number of Indian players is increasing, but not, if you ask someone to name the high brand names, there's not that many.
In terms of?
The wealth management companies.
Right.
So I'm just saying that while you are bullish on the number of investors, especially the affluent segment, it is the holy grail, and the wealth management industry with its high sort of salary costs
Absolutely.
not enough new MFDs coming in, qualified people. Therefore, they haven't really been able to tap this affluent segment. The economics doesn't make sense. So how do you see that playing out? Do you see fintechs playing a role there?
So it's a very interesting analogy I can give you.
Would retail investors listen to a fintech?
I think it's happening. If you see the number of users for all the big players in Zerodha or Grow, or you see 95% would be the retail players. And
You're right, but they are not giving advice.
They are not giving
It's
advice.
do it yourself.
Correct.
Do you really think that the affluent segment can do it themselves?
So there are investors who like to do on their own. So a certain percentage of their assets, they definitely do it. But at the same time, they trade with multiple advisors. They trade with multiple brokers with the assumption, and they have personal relationship with some of the sub brokers. So yes, to answer to your earlier questions, with the growth in the number of professionals is not rising. I mean, multiple challenges. I mean, over the period, the commission and fees have been capped by SEBI. So they have to reinvent the model. And the way I'm seeing it, I'm seeing the new players, and we have a smaller plans for even B2B customers managing 25 crore or 25 crore of AUM or 50 crore of AUM. We are seeing the entry of those professionals right now. So I personally believe that this will change over the time. The analogy is in US, where it was reason maybe we investors in India are not comfortable giving out direct fees to the professionals, and I believe that should change. I think they deserve it, and that will change the landscape in terms of quality of advice, quality of investment, and focus on asset allocation and long-term corpus building.
The point that you made about Indians not being comfortable paying fees is exactly what I guess the VCs and overseas investors are worried about. Do you think we're at a point where the Indians are comfortable paying fees? I mean, it's not bearing out in the ROI.
I'll give you the analogy in my product. When we started off being a software product, most of the Indians would not like to pay the SaaS model or the year-on-year cost for any software products. We were very much used to paying one-time cost for any software. That has changed over the period. I mean, in my earlier 5 years, people always ask that, do you have one-time solution, lifetime solution kind of a subscription? Because we're not comfortable paying this. But we are not getting that question, so people are comfortable. I believe that will change over the period of time.
You raised funding from Rainmatter. What was that for?
Very interesting. I think before many years, when we encountered some issues in uploading Zerodha contract notes, I just reached out to Nitin, and the team, and he responded within few minutes and brought in the team and resolved those issues. And I was wow. And at this level, if there is so much care about customers, and we at my bootstrap, I tried the same model. And
so your company was bootstrapped?
I company bootstrapped till last when we got funded, yes.
So your company was bootstrapped and you had this issue with the contract note, and Nitin reached out. But then what did you need the funding for?
So I'm giving it some little context, and then I thought at that time that if even in future if I have to raise money, I think Nitin and Zerodha would be the first choice we should try, and that's what happened. In 2018 when Atik and Ashin joined, we were earlier the desktop application. People were not comfortable putting data on cloud. We didn't have good digital infrastructure, no good broadband speeds. Everything changed in last 5-7 years. And then we pivoted model from desktop to cloud. And we could not roll out so many automation features which we did in cloud. And now I think last year we felt that now we have reached to the point where we need certain kind of branding, certain kind of funds to build the team and roll out more features. So primarily funding was not for the marketing dollars, but more to build the team and to strengthen our IT team and reach out to more people, maybe through social media or other modes. But again, even after funding, we have not increased our performance marketing.
I was going to come to that. Given that you are targeting B2C, would you not need a lot of money to be able to reach your market or marketing sort of?
Again, coming from bootstrap approach, I always been very conservative in spending money on acquiring customers. When you are running a bootstrap venture, focus is always to solve the immediate problem and grow organically. I mean, you don't have luxury to spend money. But
the risk that you run is that it becomes somebody else's feature. right? I mean, you are a product, but your IP or your USP can then become somebody else's feature. You lose time, right?
That's true for most of the ventures, or maybe true others, but with MProfit, what I realized that it's a very unique problem to solve, and there is no immediate money. So rightly so, in last 10 years, I did not see many players got funded for just to solving this problem, and this problem was evolving. I mean, there are so many different changes, nuances, different products coming into markets. How do you track them, manage them? There are different taxation for each product. So we have rolled out features and supporting them as we moved along, and focus was always there. So solving the real problem, and we never thought about how are we going to acquire customers. It just happened organically, and at some point we realized that now we need the scale. We need to, as you rightly said, that where new players may come up, do we need to do something? Yes, and then we realized that let's raise some funding so that we can roll out better features, better automation.
So do we expect to see some marketing from you?
In terms of, sorry?
Now that you have funding,
so
do we expect more
So
marketing?
as I said, last year we raised funding, almost 1 year is over. We have not raised our marketing budgets. Even we were maybe at the same level as before the funding. So no money, whatever we raised, we are not using for marketing, but we are going to add a lot of features with respect to tracking international asset classes right now, giving more analytics, more fundamental analysis. So
true, but what I'm saying is that earlier you said you're very bullish on the affluent segment, right? India is going to grow, middle economy, the number of users should be increasing. If you have decided to do B2C, how will you reach these customers?
So various initiatives are going on right now. We have built the sales teams, we are reaching out to HNIs, we are reaching out to family offices. In last 6-8 months, even in fact we have rolled out new higher pricing plans for those, and it is very well accepted by those based on the AUMs. We have now 25 crore, 50 crore, 100 crore, 200 crores family offices plan. These are, we call it B2C plans, and we are seeing that we are solving a real problem, and it is being accepted very well. So yes, we have our own channels now. We have identified that this is how we have to reach out, and this particular affluent class is very difficult to target them by performance marketing. And what we have seen is that word of mouth publicity, networking effect plays a major role here, and that is helping us, and that is what we want to build on.
There's actually a well publicized study about investors sort of being their own worst enemies, and therefore there's a behavior gap. So if the fund performance is 10%, investors' performance is more like 5 or 6, I think. From memory, there's a good 3-4% performance gap. Part of the reasons is they don't understand the IRR calculation. How do you imagine your product will solve that or help in solving that?
It's a very common problem. I think most of the investors go along with the cycle, and when the fears creeps in, you trying to take irrational decisions, and that's definitely lead to some of the unpleasant experiences in terms of returns. MProfit is not an investment app or recommendation app. We don't provide those kind of analytics where you can time the market, but what MProfit does is provides historical returns, where as an investor, and most of the investors with MProfit are very long term in nature. So we have started different analytics where you see 1 year, 2 years, 5 years returns with respect to benchmark indices, and then you see the various market cycles where your returns panned out, and you could see the fluctuation. But for the longer period of more than 5 years, 10 years, it normalizes. And if we can provide this kind of analytics, that gives the perspective to the investors that what is the best for me if I would have stayed longer.
But also, do you actually in your product give the benchmark data? Because I believe that
Absolutely.
is expensive. Yeah, you do?
Absolutely.
So it's XIRR on my portfolio, and then this is the benchmark.
Absolutely. So that is one, I believe this is most basic analytics anyone should look at it. If you are investing and you want to know how my investment is doing, how do you know your investment is doing? There has to be, everything is relative, right? There should be some reference point. So benchmark indices provides this reference point. And comparing your returns with benchmark indices, even if you are doing on your own, or you are investing through professionals, I think it's a very crucial whether you are that is meeting your investment philosophy based on your goals.
That concludes our discussion with Kiran Shah on MProfit's foundation and its functionality, creating a base for the next generation, his sons Atik Shah and Ashin Shah. Now this transition came with a new set of responsibilities for Atik and Ashin. We invited them to our Rainmatter office in Bangalore. So let's hear it from them about their transition and their vision for MProfit.
A lot of people, they think that I can just import my holding statement, as you said.
I get a holding statement.
Yeah.
Whoever I work with, my service provider will send me what my portfolio is worth.
Yeah.
Right? So
or you
what
can
is
see it in the app.
I
as
can
well.
see it in the app,
Yeah.
right? So I have that from anywhere
Right.
and multiple places.
Right.
Why is that not enough?
That's a very good question. So the reason why a holding statement is not enough is because holdings only give you a certain picture. They only tell you what your current portfolio is, what the allocation is across different investments. But what it doesn't give you is the actual transaction level details. And why are transaction level details important? They're important because transaction level details are required if you want to give any kind of performance reporting on a portfolio. So if you want to track your profit and loss or your unrealized gain thus far, or most importantly your XIRR, there is no way you can do these things without actually knowing all the different transactions, that buy and sell transactions that have been done in your portfolio since inception till present. So that is absolutely essential for you to give these insights to a customer, and that is why MProfit takes this route of actually asking a user to import their historical information.
In the holding statement, there's one column that says date bought. Isn't that enough?
No, so the reason why the date bought is not enough is that, the date bought, I believe that even if the date bought is there, it may be the last purchase date or the first purchase date, but you may have, let's say you're holding Reliance Industries as a share. You may have bought it on different dates with different purchase prices. The holding statement is not going to be able to show you that breakdown of all the different purchases that you have made. You may also have sold some Reliance shares. That factors into your performance tracking. You need
So you're saying most holding statements, when they do the date bought, they may be aggregating multiple different transactions in that.
So holding statements do give a summary of, they basically give you an account of what the different buy and sell entries is finally the final holding value coming to. And as Ashin said, it's probably the last date of purchase or maybe the first date of purchase that is reflected in the holding statement. But every single cash flow in and out of your portfolio needs to be factored when you want to give a profit and loss or an XIRR reporting to an investor. So
let's get to that. So we've done all of this sort of transaction level data. For what purpose? So there are two that I'm hearing. One is the tax reporting, and second is the performance reporting.
Sure.
Tax reporting, I give all my statements to my chartered accountant and let him deal with it. Are you telling me that at the back he has to go and do all of this extra work just to be able to do my tax return?
Absolutely. So typically the journey would be that if you give all of these details to a chartered accountant, they would either have their own Excel sheets.
They would literally doing it manually, is it?
Yes, so they are obviously experts when it comes to knowing about taxation. So they'd be able to factor in all the different nuances.
Understood. But is there a particular software that is available that they use other than Excel?
A lot of chartered accountants use MProfit today. So we do cater specifically to chartered accountants for this very use case. So there are many chartered accountancy firms in Mumbai and even outside of Mumbai that do use MProfit to compute capital gains for their customers. Even the branches of banks, which I won't name right now, they have outsourced their capital gain computation work to chartered accountancy firms that then use MProfit to compute capital gains for thousands of investors. So they have to factor in a lot of different nuances, the different transaction imports across brokers, corporate actions like bonuses, splits.
Let's talk about that. Okay, so it's sort of linked in.
Yes.
How sort of you mentioned that as a sort of a benefit. Any data source that I buy sort of to update my portfolio, doesn't that give me all the corporate actions?
No, so generally when you are using, let's say, a holding level portfolio tracker, you don't have to necessarily worry about the corporate actions because you're just seeing the snapshot of what my current holdings are and those are adjusted with the corporate actions. But as soon as you come into, let's say you're talking about the tax side of things and you need to account for, you need to calculate your accurate profit and loss and adjust, let's say I bought 10 shares of Reliance 10 years ago and ever since then, they may have had a lot of different splits, bonuses, mergers. They just recently demerged Geo Financial. All of these factors are very important when you compute your capital gains, and you are not getting that information from most portals out there. And it's also very tricky to accurately account for these corporate actions when doing your capital gain computation. Some corporate actions are even trickier than others. Like I don't want to get too much into the detail about it, but demergers, for example, where a company spins off an arm and let's say they allocate 60% to the parent company and 40% to the child company. From a taxation standpoint, you have to accurately track only 40% of the purchase value of the original parent company in the news. If an investor has to do this manually, or even a CA has to do it manually, it's often very cumbersome for them because they have to get firstly the feeds about what was the ratio, what was the date, apply that in Excel and manually compute it. With MProfit, we are trying to automate that journey entirely. We have an automatic corporate action module which you just apply in one click and the entire computation is handled for you.
Okay. Let's talk about the third use case, the other use case, which is the performance tracking. You mentioned XIR a few times.
Yeah.
How many investors look at the performance of their portfolio?
That's a very it's definitely going to be a little challenging for us to answer how many investors, because we don't have any way to track how many investors are.
But do they? Okay, so how often do investors ask for this feature?
A lot. So for MProfit, I would say that we definitely cater to a savvier investor, someone who understands what it takes and what is required to know how their portfolio is doing. So I would say from an MProfit standpoint, a large majority of investors do care.
Right. So a retail investor, being you all have, okay, maybe your family is different because you come from this field, but most people have heard of or hear these stories about some uncle who says, I bought this house in 1900 and something and now it's worth this much. See, my profit is this much, right? They've forgotten about all the cash flows in and out in terms of maintaining that house, for example. Or same thing with shares. I bought this stock at this price and now it's like 10 times. See how much money I've made. So retail investors don't seem to adjust for the cash flows in and out at all, and they don't seem to care, more importantly, whereas as you said, the more savvy investors care. So does every savvy HNI investor ask for an XIR?
Yes, absolutely. I would say that a majority of savvy
You don't have to educate them. You don't have to educate them what they are.
No, we don't have to educate them. They know what it is, and in fact, we had a regular XIRR feature for the longest time, and we were getting a lot of requests to make it even more specific and detailed and insightful. And since then, in the last 2 months, we've added an advanced performance analytics in MProfit, which give you more detailed XIRR insights across different time periods. If you want to track your XIRR financial year wise, if you want to track it like trailing 1 year, trailing 2 year, trailing 5 year XIRR, and let's say you want to compare that XIRR against a benchmark index like the Nifty or the Sensex, or a small cap index or a mid cap index. We've added these features just recently because there was a lot of work required by Ashin and the tech team to build this out. But ever since we've launched these features, people are really appreciating how much detail the insightful the XIRR features have gotten. So to answer your question, I think they do know what it is, and now I think the importance and awareness of XIRR is definitely increasing across the board. Like brokers are also being asked for it to provide it in their own portals. So and I'm sure that brokers are going to get to it soon as well. What MProfit does is it allows you to consolidate different investments and give you a group level XIRR reporting, because you want to track the IRR on your entire portfolio, not just a portfolio that, let's say, is being held with one broker, but you have mutual funds on the side, you have FDs, you have property, as you rightly pointed out. All of these things need to be factored in from a return standpoint, because ultimately, to know the relative return of each investment, XIRR is probably the easiest metric to use. Because if I'm buying a bond and I'm making 20% on that bond in 3 years versus me buying a stock and making, let's say, 30% in 1 year, to track your returns on an annualized basis, XIRR is the one metric that levels the playing field across different investments.
While sticking to stocks and say bonds, do people actually also ask for performance attribution? Do they dive deeper into what stocks or what sectors they added value in, and so on?
So absolutely. So within our XIRR module, we do get requests and we do provide your XIRR for individual stocks as well. So you can see the overall XIRR for your portfolio, but you can absolutely see which stocks were outperforming and now you can see that for different periods which stocks were outperforming or underperforming, and use that in your investment decision making going forward.
Now say I have mutual funds and PMS and AIFs, and let's talk maybe the other use cases like small case, which is like a retail version of a PMS, right? In that I'm buying a basket of stocks, whether PMS or a basket, and again, do retail investors or other investors look through and say, okay, what was the performance attribution of the fund manager who I've given this to?
So that is definitely an advanced requirement which does come from time to time, where you want to track the performance of a specific fund manager. So for PMSs and AIFs, for example, we have a mechanism or a feature available where a user can create a separate portfolio just for their PMS or just for their small case as well. So in small case, we have a tool, a strategy or goal tagging feature that can allow you to create small case wise portfolios. But for a PMS, if I'm an investor who buys direct equities but also invests in a couple of different PMSs, I can create separate PMS wise portfolios for those different PMSs, and MProfit is able to definitely let you know what your XIRR is on that particular PMS portfolio over time. PMSs usually report their returns as time weighted, so TWRR, and that basically does not take into account the impact of exits and entries of a specific investor from the PMS. But at an investor level, definitely the investor wants to know how their investment in that particular PMS, if you gauge the timing of their entry and exit, how that has performed. And that is where MProfit's XIRR feature for PMSs comes into play.
So that's what I mean. So as an investor in a PMS, do I have enough information to judge that fund manager, the attribution analysis? So I can say, listen, Mr. Fund Manager, you did a good job, or no, you didn't do a good job.
Yes.
So is that
is definitely possible. It is actually possible at the individual scheme level. So even if one fund manager has 3 different schemes, you can create different views in MProfit that allows you to track the performance of each scheme, and then you can create a group of different portfolios to track consolidated performance too. So we have both of these features.
okay? So we've talked about direct stocks and bonds. We've talked about managed accounts. Now let's talk unlisted or sort of more lumpy assets. If I have a real estate portfolio or any other unlisted sort of asset, how do I sort of put that into the system?
Sure. So when you have unlisted assets, fundamentally because of the nature of the product, the tracking for that is a little more manual, even in MProfit. We do allow you to add all these asset classes in MProfit, and there's a distinction between 2 different types of unlisted assets. One are the interest-bearing assets. For those, we allow an investor to simply add the characteristics of the bond, the interest rate, the frequency, and then we can do the automatic calculation of when the interest payouts are going to be and interest cumulative, and factor that into the current value for an investment. When it comes to other investments, let's say even an AIF to some extent, or a property or a private equity asset, those investments a user would have to manually add the details, and we allow them to manually update the current valuation, etc., whenever required. One feature that we do have for certain asset classes where, say that they are not listed on an exchange, but the current valuation is available for an AIF. Like a monthly statement is...
So the AIF is sending me the valuation?
Correct. So from our import engine, when you get your monthly statement, if you just upload that into MProfit, it'll update the inflow, but it'll also update the current value. So we try where we can to automate that live tracking even for the unlisted assets, and where it's not possible just because of the nature of the product, a user can just manually update it, because let's say for a real estate asset, we may not have information about what your house is currently worth, but you definitely can update that to keep your portfolio net worth in sync.
Okay, so now let's talk about sort of this family consolidated reporting. The assumption is that families do want to see it across. I think in your families looks like you work together, but is that really a use case for enough investors in India?
Absolutely. So definitely in our case, Ashin, me and Kiran, we're part of the same business, and you can say that we definitely track our investments together. But outside of a family like ours also, a family where just a husband and a wife and their kids, even in a family like that, the husband and the wife definitely like to track their portfolios together. They have parents also whose portfolios need to be managed. And in India, the concept of joint family is still around. I mean, it's not going away anytime soon. We've had family offices where we know that each of the two brothers, they have their own families and they're independently working together. But at the same time, they want to track their investments together. Because they do operate as a joint family at some level. So that is a very, very common requirement in India. And almost every investor who comes to MProfit is using our family grouping feature and is not necessarily using MProfit just to track one portfolio. If that was the case, then we definitely would have had a lot of people just using our older free plan, where you could have created two portfolios. The new free plan is not the same, but we saw that people need to create more portfolios in MProfit. Yeah.
Okay, so that's the sort of product features. Have we covered pretty much all aspects of that?
I think that one feature that when it comes to the asset allocation, it's something that we've recently launched where you are able to see not just the specific asset classes like stocks, mutual funds, bonds, fixed deposits, but you can see at a broader level equity, debt, real estate. You can see your actual true exposure, even if a debt, let's say you are investing in an ETF, but it's a debt ETF, you want to accurately characterize that investment as a debt percentage of your portfolio. And similarly, let's say you're investing in a sovereign gold bond, which is a traded bond in the markets, but fundamentally that is exposure to the gold asset class. So we've recently launched a feature where you can see your true exposure to equity, gold, real estate, international assets, and other asset classes as well at a broader level, because that's how people think about asset allocation. When you go to a financial planner or when you think about starting the markets, you'll usually say, okay, I need to have a certain exposure to equity, but I need to have a percentage in safer, less risky assets, maybe a certain exposure to property. But on an ongoing basis, it's not very easy for me to check whether am I actually following this investment philosophy that I created for myself, especially when so many of these products are intertwined together.
If you take real estate, for example, I have bought a property, but I also invest in REITs, real estate investment trusts. So those listed assets, we do buy them and we do buy a property as well. I would like to see what my exposure is to real estate as a category in general. And that's where this true asset allocation feature does tell me how exactly my portfolio is truly allocated across categories rather than just products. So that's something which we really focused on. If you are buying, say, an NPS, which is the National Pension Scheme, and you're also buying solution-oriented mutual funds, you want to see what your allocation is to retirement-focused products in general. So that's something which MProfit now gives you. If you're buying stocks and you're buying equity ETFs and you're also investing in unlisted private equity, what is your true exposure to equity as an asset class? So that's what you can get in MProfit, and you can see and analyze your portfolio in these different segments.
Yeah, so I'm curious. So for example, you looking after tech, do you have run-ins with Pallav and do you have run-ins with Kiran in terms of business strategy or marketing strategy?
I would say that it's not very bureaucratic, like
Sorry, I meant in terms of generational, okay? I meant in terms of...
Right. That way, okay.
Because you are younger,
yeah,
chances are you represent the younger audience.
We've been fortunate that it's been very constructive overall. I think both Kiran and Pallav are very appreciative of the fact that, they've built this platform, but, they also want us to take it forward. We have something that's there, but, with new ideas, with younger thoughts, we have to take MProfit for the new age. And I think because of that clear understanding, it's been very constructive and very good for us.
Yeah, they've been very acknowledging of the fact that we can bring new ideas to the table. Right. So that has been great. We also have, one of our fifth co-founders, Manish, who is not involved full-time, but he's been a strategic advisor to us. And, from a networking standpoint and from a relationship standpoint, he's added good value too. Sure. So we have a very good working dynamic between, all of us. And, we have a very good and young team now. Most of our team is between the ages of 20 and 30. Nice. So, people are, we've created a very collaborative and fun working culture. People have to help each other out, and it's not bureaucratic, where even managers take feedback from the junior members and vice versa. So it's been fun.
That is fantastic. Yeah. I'm sure Rainmatter would love to hear that.
Yes,
so thank you. This is a lot of fun. Thank you very much.
Thank you so much, Hansi. Thank you so much.
Thank you.
Thank you.